right, good afternoon, everybody. Thanks for joining us. My name's Jordan McKee. I lead the Fintech Research and Advisory Group at SandP Global Market Intelligence, and very excited to be joined on stage today by Chris Winter, who's the Managing Director and Head of the Asia Pacific region at Discover Global Network. Chris and I are looking forward to giving you an exclusive look into a subset of findings from our third annual State of the Global Fintech Ecosystem Study, which SandP Global Market Intelligence does in collaboration with Discover Global Network. This is the most comprehensive fintech study of its kind. It's really designed to provide a 360-degree view into the evolution of the fintech ecosystem, where it's at today, and importantly, where it's headed, what the direction of travel looks like for the future. And the way in which we accomplish this is by talking to a variety of stakeholders in the marketplace. We conduct surveys of those that are funding innovation, more than 80 venture capitalists. We conduct surveys of those that are driving the innovation, more than 1,000 fintech vendors headquartered across Asia Pacific, Latin America, Europe, and North America, across more than a dozen fintech segments. And of course, those that are consuming the innovation, more than 1,000 consumers across those same regions. So the premise of the conversation today isn't just to talk about the findings and what resonated with us, but also to better understand how Discover is contextualizing these findings and really the role of partnerships within the fintech ecosystem as it relates to its go-forward strategy. So actually, Chris, to that end, before we get into things, it'd be great to learn a little bit more about Discover Global Network and your role in the value chain.
Great. Thank you very much, Jordan. Pleasure to be here. And first of all, good afternoon, everybody, and thank you that not everybody chose to take this time to go and have their lunch, despite the prompting from the previous speaker. So thank you for that. So yes, Discover Global Network, hopefully you've seen some of our branding around the event here. Just to give that some context, we're owned by Discover Financial Services, the leading US retail bank. Discover Global Network is really our international division, so it's our international scheme, payment scheme. Many of you will be more familiar perhaps with one of our go-to-market brands, one of our consumer brands, which is the Diners Club International brand. So hopefully there'll be a few handful, at least, of people in the audience that maybe have one of those cards issued with our strategic partner in India by HDFC Bank. Or indeed one of our net-to-net partnership cards issued through the RuPay brand as well. So hopefully there's one or two cards out there. My responsibility is to head up the Asia Pacific region, relatively new into role, so don't ask me too many questions about the region yet, but based in Singapore and certainly very excited to be here.
That's great. Thank you for that, Chris. So let's get into things. And up front, I'd be remiss if I failed to acknowledge the headwinds that are facing the fintech ecosystem. As we know, there's a variety of macroeconomic pressures that are bearing down on the sector. These are factors that are prevalent globally: rising interest rates, inflation. It's perhaps most noticeable in the fintech funding environment. If I were to look at some of S&P's own data, last year we saw fintech funding globally decelerate by about $30 billion year over year. So funding for fintech's less plentiful, less accessible than it once was. That said, the long-term prospects for this space are incredibly vibrant. And when we talk to venture capitalists about the future of the market, they remain incredibly optimistic. So what we see in our surveys of VCs is that 94% have a strong growth outlook for the fintech sector over the next 5 years. Fintech ranks as a top 3 emerging tech sector in which they'll be increasing their investment over the next 5 years. But they have changed some things about their investment strategy. And the number one thing that VCs have changed as it relates to their investment in fintechs is their prioritization of the partner ecosystems of those fintech portfolio companies. They're looking for fintechs that have that story around sustainable growth, around collaboration and doing more with less. And this message is resonating with the fintechs. What we see in our surveys of fintech vendors is that partnership strategies are a top 2 critical success factor that they see for their business. And interestingly, among fintechs that partner with payment networks, 93% have actually increased their reliance on those networks due to the macroeconomic factors facing their business. So Chris, I'd love to dig into that partnership theme a little bit more. Discover Global Network, a business that's headquartered in the US, but certainly has a global reach, a global value proposition. You yourself sit in Singapore. Would be great to understand a bit more about how Discover is collaborating with fintechs outside of the US.
So, yeah, thanks, Jordan. So just a couple of points on that. So first of all, our kind of go-to-market strategy is through three main channels. So one is, in some markets, acceptance is our #1 priority. So we work with the traditional merchant acquirers within those markets. So that's one avenue that we pursue. The other is, I mentioned earlier, our partnership with HDFC in India. We have a number of such partnerships around the world in terms of franchise relationships, issuing and often acquiring those Diners Club International cards. And then our third strategy is what we refer to as our net-to-net partnerships. And again, there, India is a perfect example of that, our relationship with NPCI and the issuance of the RuPay cards to support those internet cards as they travel internationally. So those three routes to market really give us a number of opportunities to collaborate with fintechs and engage with fintechs. So #1 is our scale. So we have a presence in 200 or so markets around the world. We have acceptance locations at about 70 million outlets around the world. We issue over 300 million cards around the world. So all of those environments, all of those scale numbers ensure that we have to have multiple partnerships with multiple fintechs around the world. We can help those fintechs reach those customers, those B2B customers in those markets where we are strategically targeting them. I guess the second area after scale is the regulatory piece. As I mentioned earlier, we're actually owned by a US bank. And so some of you may be able to imagine the amount of regulatory overhead that we face, both as a global payment scheme, but also as a US registered bank as well. So that creates a lot of learnings for us from the regulatory environment. We tend to look at the regulators as our friends and a learning experience, learning opportunity for us. So they help us become a better network and a better bank. Those learnings that we can then pass on to the fintech partners as well. So that regulatory backdrop. And the assurance that if they are doing business with us, then as we set the bar very high in terms of our partners. And so if they achieve that, and they reach that bar, then there's a lot of credibility around that. And I think that reassurance piece is important. And I think, Jordan, it came out in the study as well, is the association that fintechs have with the major payment schemes. And I think if I remember rightly, it was around about 65% or so of investors would more likely rate higher a fintech partner that has a relationship with a scheme. So we're giving that level of credibility to those fintech partners as well. So it's quite a high bar, but if you reach it, then it's worthwhile.
That's great, and that lines up really well with what we saw in the research, Chris, where things like credibility, access to customers, technology, scale, these are all things that fintechs are prioritizing in their partnership strategies. So I want to talk for a moment about specifically what we're seeing in Asia. One of the most consistent findings in the study over the past 3 years has been the level of digital payment maturity in this region. What we saw in this year's study, 96% of consumers in Asia have used at least one type of digital payment service over the last 90 days. That's up 2 percentage points over last year. It's 10 percentage points higher than what we see in North America. It's 16 percentage points higher than what we see in Europe. And what we know is that consumers in Asia lead the world when it comes to adoption in every single type of digital payment capability, P2P payments, buy now, pay later, digital wallets. And it's not only an adoption story, we're also seeing usage of these methods increase. So if we were to look specifically at India, among consumers in India that use buy now, pay later, roughly 61% are using BNPL twice or more a month. That's up from 50% last year. And really what we're seeing is that this high level of digital payment adoption and utilization starting to create a foundation for adoption of more emerging types of financial experiences, really creating that bedrock for these new experiences to thrive. And so what we see in the region is that 21% of consumers in Asia have bought, traded, or sold cryptocurrency over the last 90 days. That's 3x higher than what we see in Europe, twice as high as what we see in North America. 32% have used a connected commerce experience over the last 90 days, perhaps purchasing something through a smart speaker. That's more than 4x higher than what we see in Europe. And 46% have used a biometric payment capability over the past 90 days. That's more than twice what we see in Europe and North America. So we're really starting to see some of these more immersive types of experiences take root in this market. And Chris, as we think about the next chapter of digital payments, it seems like we're seeing this increasing theme of symbiotic partnerships where both the incumbents and the fintechs bring a unique set of capabilities and advantages to the table. And when that collaboration occurs, right, a bigger and better value proposition can be formed. I'm curious the role that you see partnerships playing in really helping to ensure Discover Global Network is staying aligned with some of the more emerging trends that we're seeing in the market today.
Thank you, Jordan. So I think, as I mentioned earlier, I think one of our major roles and our major strengths is actually bringing partners together, be they issuing partners or be they acquiring partners. If we look at the acquiring space, for example, then I think we can all understand the complexity that that industry is now experiencing. Both whether it's from a physical card, from a contactless card, or from QR codes, or whatever type of acceptance mechanism and channel that we're now seeing. And so we can see the multitude of value-add services that sit somewhere between the merchant and the acquirer. So all of those have to line up to ensure that all of those card types are accepted. So and that's one area that we certainly look at very, very carefully. And a lot of what we do is introducing our partners to some of those new players as well. So many of our large partners, whether our franchises from around the world or our major acquirers, already have established outreach programs and very sophisticated ways in which they engage with the fintechs themselves. But many don't. Especially what we see in a number of emerging markets that we operate and where we operate domestic support with domestic schemes. So where there is a domestic network, be that a domestic switch or a more sophisticated, fully blown network as we have here in India, then often we find that the partners, the individual issuers and the acquirers that sit behind that network do not have that level of sophistication and level of engagement. So there's a role that we absolutely play there. That's not to say that we work with thousands of fintechs. We're not of that scale. That's not a priority for us. But where we do have strategic partners and we do have strategic networks, then we are doubling down on those markets and establishing a greater depth of relationship with our partners. And in order to do that, one of the value-added services that we can bring is to introduce them to certain fintech partners that are going to provide enhanced services, value-added services to their customer base, whether that be a merchant customer base or a cardholder base. So in summary, I guess we're making fewer partnerships, but we're looking for more profitable and better partnerships. Part of the relationship that we have with the fintechs it could be anything from a straightforward referral agreement. It could well be that we will simply introduce partners to fintechs to our partners. So actually we just play an introductory role, kind of like a marriage counselor almost, or a dating app. Or we may extend into a white label type arrangement at one end, or even an on behalf of service. So there are a number of different ways that we engage with fintechs and provide introductions into our partners.
It sounds like, Chris, in many ways, you're sort of playing the role of a connective tissue for the ecosystem, which I suppose at the end of the day is what a network is all about. So as we look to the future and we ask consumers to think about the future, what's abundantly clear is that security, trust, and privacy are really the foundational elements for digital payment innovation. And these are sort of perennial themes in the payments industry. those factors have to be firmly in place before innovation, before scale really starts to take hold in the marketplace. And so what we see in our consumer research, the number one area where consumers in Asia want their banks to do better is empowering them with security and fraud prevention controls. Security of personal information is the top thing that consumers in Asia want reassurance over when it comes to adopting a new payment experience. And among all the different entities that provide different flavors of digital or emerging payment experiences, financial institutions rank as the number one most trusted provider across every category: open banking, instant payments, biometric payments. And I think in a lot of ways it goes back to that collaboration story, where collaboration isn't just about collaborating for the sake of creating a great experience, but it's also about collaborating to ensure and instill a sense of trust in the end user, to ensure that they're comfortable in engaging with the new service that they're about to sort of embed in their daily lives. Putting that aside for a moment, Chris, I want you to sort of think about the future for a moment here. There's a variety of challenges, there's a variety of opportunities that are facing everybody in this room. I'd be curious what's top of mind for you, or at least what you're thinking about as it relates to challenges and opportunities for the marketplace this year, and especially moving into 2024.
Yeah. So, thank you, Jordan. So I think, look at, if we take the challenges first, then I'll try and end up on a more optimistic note. So some of the challenges we face, but they're good challenges. Acceptance is our number one priority. So number one is to provide utility for our cardholders around the world, wherever they want to travel. When they travel to APAC, a lot of our cardholders have some challenges. The prevalence of QR codes, for one. Super wallets, the use of super wallets. That's not a familiar concept or familiar way of transacting outside of the APAC region. So if we look to Western Europe, for example, if we look to North America, that's not a prevalent way of transacting. So we need to find a way to overcome that challenge, overcome and bridge between the conventional cardholder coming into, whether it's China or whether it's the Far East, anywhere, and how they can use their card, be that loading into a wallet or QR code functionality. QR code functionality interoperability is probably the other thing I've observed just in my short time in the region. It's a multitude of proprietary QR code applications. It's a little bit like where the card business was perhaps 40 years ago, with a lot of proprietary schemes, and there just doesn't seem that interoperability to be there yet. You know, I can look at a small food store in Singapore, and there's probably 8 different stickers with 8 different QR codes, and trying to navigate through that as somebody that isn't familiar with QR codes, it can be a real challenge. So I think there's a real opportunity there in terms of bridging and doing what card schemes have done in the past, which is providing that interoperability both domestically and also internationally as well. And I think just on that international, the observation we see is travel is back. Travel is back big time, both business and in leisure as well. So there's huge pent-up demand, as we can see from the phenomenal attendance at this conference. So there's a lot of opportunity in travel, and especially there, not only in consumer, but also for us in the industry, in the B2B space. A lot of opportunity there for us, in a nutshell.
Thanks, Chris. 20 minutes goes by incredibly fast. We're just about out of time here. So thank you so much for your insights, Chris. Thanks for the collaboration on the research. There's a QR code you'll see on the screen for those that would like to take a deeper dive into the reports and that want to access future reports. Please take a scan and monitor the page. Thank you, everybody, for your attendance. Thank you for being here. Have a great show.